Well, I'm Jayendra Rana. So the topic for the discussion today is ensure financial security of your family. Ensure financial security of your family. It is important to have life insurance. If you have people who depends on you financially, if you unexpectedly pass away, your loved ones might struggle to cover their living expenses, debts, and future plans without your income. Well, life insurance provides a one-time payment to help fill this financial gap and support their stability. Especially term life insurance provides a one-time payment. So, what are the life insurance rules to ensure financial security? How much money will your family need if your income stops? The life insurance rule recommends having life insurance coverage that is at least 10 times your current income. This amount should consider all your debts and loans. And this rule helps to determine the amount of income your family will need to cover their daily expenses if you are no longer there. So if your annual income is rupees 5 lakh, you need rupees 5 crore of life cover so that your family does not face any financial difficulty and can continue with their current lifestyle even in your absence. So remembering that your income will change over time is important. So it's a good idea to review your life insurance coverage every few years. This is a crucial part of ensuring the financial security of your family in the event of your unexpected passing. Then how to calculate minimum sum assured? To determine the minimum sum assured needed from a life insurance policy, you should start by calculating your annual income and the present value of your long-term and medium-term goals. Then subtract your current liabilities from the minimum sum assured by the life insurance policy you are considering. If the total of your long-term and medium-term goals present value and annual expenses equals the sum assured offered by the life insurance policy plus your current liabilities, then it is advisable to choose the insurance policy. So choosing a life insurance policy is a critical life decision. However, it is not the only factor to consider while selecting life insurance. There are some suggestions for choosing the best life insurance coverage according to the comparison of various products. So first of all, you consider your budget. Because life insurance offers high coverage at affordable premiums. But choose a plan you can comfortably maintain without straining your finances. Then compare different plans and providers. Do not settle for the first option. Research and compare quotes from different companies to find the best coverage at a competitive price. Then also consider the riders. Riders or add-ons are optional, but they can enhance coverage, like disability income or accidental death benefits. So choose riders that complement your specific needs. And then buy term insurance plan online or any insurance plan. Buying insurance online offers convenience, choice, and transparency. You can research. compare and purchase policy from the comfort of your home. When choosing an insurance policy online, consider factors such as coverage, amount, term, length, and premium affordability. And then review your policy regularly. Always update your coverage as your needs and circumstances change. Also, cost of living adjustment should be considered to maintain adequate coverage. So, life insurance is the most crucial aspect of financial planning because it protects all other goals. Don't look at insurance as an expense. It's crucial for your family's financial culture. This critical component is often missing in the average financial plan. So, maintaining the financial planning depends upon many things. First of all, sufficient life cover. Because the stock investments have given handsome return to certain people. The equity funds they choose are among the top performers. People also bought a house 3 years ago or 4 years ago just before real estate prices surged. But when it comes to managing finances or financial security of the family, insurance is the best option. So, protect all your goals by taking a suitable plan. Will rupees 1 crore insurance be sufficient to protect your goals? The life insurance plan should be big enough to replace the income of the individual, pay off all debts, and provide for future big ticket expenses. So it takes very little to secure the financial future of one's family. Pure protection term costs very little. A 30-year-old needs to pay less than rupees 1,000 a month for a cover of rupees 1 crore for 30 years. This works out to as little as rupees 32 a day. The price one pays for a soft drink. So the cost of life insurance is actually very small compared to the safety net it provides. The bad news is that people find enough reasons to not buy life insurance. The importance of insurance must be understood because when you buy a health plan in addition to the group health cover from your employer, he knows that the need of life insurance is still there. A term plan at least is necessary. If you know how important life insurance is but keep putting it off, it's time to switch gears. The delay will also cost you even if nothing happens to you. At 37, only 3 years away from turning 40, this is an age when medical conditions start appearing and premiums shoot up. If you buy a cover of rupees 2 crore now, the premium would be around rupees 26,000 a year. So this is around 2% of the rupees 12 lakh you put into mutual funds and small saving schemes every year for your child's education and wedding. But once you crosses 40, the premium will shoot up to rupees 45,000. It could rise even more if you develop a health condition. So keep in mind that the money required for household expenses and future goals will keep rising due to inflation. If you are worried about inflation, buy a plan that increases the life cover to keep pace with rising prices. The Yuva term plan launched by LIC offered this option to buyers. The cover remains unchanged for the first 5 years and then increases by 10% every year till the 15th year. By the 15th year, the insurance cover would have doubled. So get sufficient cover. Even those who have bought insurance may not have a sufficient cover. A person who bought two term plans with a combined cover of rupees 35 lakh on the advice of a friend. So more is the primary earning member in his family. His wife's income is enough to pay for household expenses, but won't cover the outstanding home loan of rupees 13.5 lakh and foreign education expenses for his two daughters. More is not buying any more insurance because his age and occasional smoking have pushed up the premium to unaffordable levels. If he didn't smoke, a cover of rupees 1 crore for 10 years would have cost him rupees 64,000 a year. As a smoker, it is about 50% higher, at least rupees 1 lakh. It is quite expensive, but more should keep in mind that if something were to happen to him, his family would be financially vulnerable. So he should consider reducing other investments and buying life insurance to safeguard his family's future. Saving is important, but financial protection ensures that your family is covered no matter what happens. See an example. There is a person called Gupta. He is 37. Household income is rupees 2.7 lakh per month. Outstanding debt is 37.5 lakh. Financial goal is rupees 60 lakh for child education and 40 lakh for child's wedding. Life insurance? No. He understands the need for insurance but has not got down to buying it. This delay is putting at risk the financial future of his family. He should buy a term cover of at least 2 crore before he turns 40 and a medical condition starts showing up. Though pure protection plan provides substantial coverage at low cost, insurance agents are reluctant to recommend these policies. This is because they pocket more commissions on endowment policies and even ULIPs. So a distributor gets 25% of the annualized premium as commission in the first year of a 30-year endowment policy. In the second and third year, the commission is 7.5%, and from the fourth year to onward, it is 5%. So the low premiums of term plan means lower commission for the distributor. Life insurance is important, but not everybody needs it. If you do not have any dependents or have built up enough assets, you don't need life insurance. Instead of buying a term plan, you should consider buying a ULIP to build wealth. ULIPs have higher charges than mutual funds, but they are also more tax efficient. If the combined annual premium of all ULIPs bought after 1st February 2021 is below rupees 2.5 lakh, there is no tax on gains. There is also no tax application for switching from one fund to another in the ULIP. Such switching leads to taxation in mutual funds. So ULIPs usually give a cover of about 10 times the annual premium. However, in recent months, some insurers have launched ULIPs that gave a cover of up to 100 times the annual premium. So, such policy that buyers can consider to be selected. However, the SAHI cover will cost you more. The mortality charges of a tulip are higher than that of ULIP. Tulip is a product launched by Kotak. While these plans offer a combination of high life cover and savings linked to market returns. So Tulip plan replaces pure protection term plan. So in such circumstances, consider everything. Say suppose a girl of 26 years, her income is 65,000 per month. Outstanding debt is 1.2 lakh personal loan. Financial goal is rupees 10 lakh car purchase next year. And then overseas holiday life. So life insurance is nil. She is single and has no dependent, so she doesn't require a large term insurance cover. Instead, she should go for a ULIP that can help her build wealth without worrying about the tax on capital gains. So life insurance should not be seen as an unnecessary expense, but as a crucial tool that protects all other financial goals. So have the changes in capital gains taxes proposed in the budget made life insurance more appealing as an investment? The long-term capital gains tax increase from 10% to 12.5% is a small change. And in section 1010D, benefit for insurance had already been limited to Rs 2.5 lakh of annual premium in previous budget. So there is no significant movement. Our advantages of ULIP is that switching between debt and equity within a ULIP is tax-free, unlike in mutual funds, where the capital gains tax applies. So many people view life insurance as an investment for generating returns. There needs to be a better understanding that life insurance serves a different purpose. Before investing elsewhere, ensure your financial goals are protected. Without that foundation, your goals may remain unachievable. Insurance is not just an expense, it is crucial for securing your financial stability and your family's future, and should not be viewed as a burdensome cost. Traditionally, people have bought insurance for tax benefits under Section 80C, rather than seeing it as a protection tool for financial security. Insurance is seen merely to fill the Rs 1.5 lakh tax exemption gap. This has changed in recent years, and heightened risk awareness is now driving the demand for insurance products. So once people understand that insurance is essential and should come before investment, term plans will gain traction and improve the product mix in the industry. Thank you. Thank you very much.